Hello, today is June 25th, 2016. My last call said that a large move was coming, which everybody knew anyway. I gave the reasons for the possibility of a major top, but I declined to make a directional call. And let's not forget that if Brexit had failed instead of passed, the market would be much, much higher. I don't like to make calls right in front of major announcements. This is my software, which is available from TradeStation. Over here it said ultimately lower prices would print, which they did. Said this rally was false, which it was. Said this price would print, which it did. It now gives us a target of 2070.50. This printed from this pattern 95% of the time last year. It's optional. If it does not print Monday, I'd forget it, but I think it has a good chance of printing 2070.50. Well, let's look at a few charts. We had a decline here which was overlapping rather than impulsive, and with just about 5 minutes left to trade, you can see that despite gapping down and dropping all day long, we couldn't even close over the middle of the day low. That's pretty positive action. All that, unless it's invalidated by gapping down sharply when the market reopens. As far as this is concerned, it's a wall into the close, and you know that represents unrestrained selling by the amateurs, and usually they are rewarded by gapping up when the stock market reopens. In fact, the futures market dropped about 10 handles or so after this. We'll get into the futures in just a minute. Well, let's start off with the major pattern. It looks like this is going to work. This is my trend line. Based on the TD lines, we have a target which is now about 1940-ish. If that's A and that's B, and frankly I think it's wave A of B, but if that's what it is, and if C is 2.618 times A, we get about 1932 minus. It's close enough for me. These prices are targets. They're not stop and reverse levels. So we have two totally different systems coming up with roughly the same price, and I think eventually that's where we're going to end up. But that doesn't mean we're going to go there in a straight line, and that doesn't mean we're going to go there tomorrow, or Monday I should say. This is the diamond, I don't mean diamond, I mean triangle, which has dominated the charts for some time, and you'll see how these Fibonacci retracements of this ending diagonal triangle have told us where the lows are going to be. So I think it's significant that the 61.8% level is right at Friday's low. It tells us that low might hold. I think this is probably A of B. When you drop like this and you slant down, it usually isn't a sustainable pattern. If you want to have a sustainable decline, you should go up and then drop. These things often turn into inverted diamond on stilts. This line here, the blue one, you have to go way back here, and you'll see there was a hole in the wall, a gap, last month, and I said it had to fill at some time. So the hole in the wall gap filled. That was 2047.26, and there should be support under it, so we're at a support level. If I can get back there. We have the same pattern here. Here's the wall, here's the hole in the wall, a gap. The rule says that hole should fill at some point. Doesn't have to be any point soon, although it usually is. And then find resistance over this high, just as this is support under the low. There's also a rule that large moves in response to news announcements tend to get retraced quickly and completely. That would mean we're going back up here pretty soon. That's a bit hard for me to swallow. It's possible to calculate targets using the diamond on stilts pattern. Here's an inverted diamond on stilts. You don't know which ones to take for the high, but if you use for the extremes, I should say, but if you use this red Fibonacci grid and set that equal to 38.2, there's your high. When you drop down in a straight line, you can take other points, use the black grid. 61.8% gives us this low on the nose. So we have support and targets at that low. Here's a larger diamond on stilts. Here's a diamond that's pretty obvious. Here's your stilt. Here's your stilt. The first challenge of the origin of the left stilt usually holds. Now it usually holds as support, and we've gone past it, but if we gap over this, it can still be support. If not, it's usually retested as resistance. It's not usually the point to look for a big drop to continue. So we're at a support level from this pattern too, at least suggesting we retest 2050 or 2063. This is a futures chart, which is pretty interesting. Futures action tells you what is happening when the amateurs have the market all to themselves. We had a 120 handle drop from here to here, and the market was locked at limit down at 1999. Anyone who read page 120 of the MEJT system knew at that point that these prices had their equivalence print. It doesn't count to satisfy because it didn't print in regular time, but everybody who read page 120 knew that a rally was coming. During the day, we had this big drop at the end, and it's important to see what happened. Despite absolutely massive, almost climactic volume, despite gapping down and dropping all day long, and despite dropping here and here when the amateurs had things all to themselves, we were unable to retest this low. The implication is that the professionals are not willing to sell at the prices where the amateurs are willing to sell. Now, whenever you call for a counter trend move, when a big drop is coming, you have to qualify it. If we gap down and hold it, when the market reopens, we could just keep on dropping. I wouldn't mind seeing a gap down Sunday as long as it were recovered by the open Monday. I think we have a good chance of gapping up, perhaps sharply, at Monday's open, and if that were to happen, I think 2070.50 is a reasonable target, and that's my call.